everyone. Today we have our another new episode, and you know that World Talent Economy Forum. Beside this dialogue, we go for more action. Action means we are developing different kind of project like smart city, smart village. Now we are working with 17 different projects. Definitely, we are inviting more investors. We have our world famous speaker who can guide the emerging economy for impact investment. Especially, we work with many social entrepreneurs. Definitely, those who are social entrepreneurs, for them, educating themselves is very important. Besides that, we are working with government agencies, especially the Prime Minister Office of Bangladesh. We work with BIDA and BEZA, and there are a lot of opportunities in emerging economy. So today we're going to discuss, we get the guideline. Definitely after the show we will share with a lot of social entrepreneurs. Hopefully through this process they can educate themselves and we can take more effective actions. So let's discuss and take action. Professor David Schumacher, what you want to add for today's session, especially when we discuss about impact investment? Yes, right now we have a lot of challenge. We just finished COP27. We have economical challenge because of war, because of COVID-19 situations and everything. How we can overcome from this situation and how we can utilize this impact investment for the development of emerging economy, especially for the manufacturing industry.
Oh, Sharif, and I wish I had answers to all those questions, but I'll give you what I think about them as well. I think anybody that did have all the right answers would be an extremely valuable person. First off, let's talk about terms a little bit, because I think impact investing means different things slightly to different people. But for me, it all comes down to value and values. So the impact part has to do with maybe social, governmental, environmental aspects that you wish to put forward, and that's the values part. But the investing part has to do with value. Okay, you have to have value for the customers that you're going to serve from whatever company that you're investing this money in. You're going to have value for the shareholders of the company. But I think that all needs to be done inside the constraint of values, whatever those might be, whether that might be a person might put value of climate change ahead of something else, or somebody might put out natural infrastructure or natural farming or something of that nature out there. So one maybe general definition would be impact investing. It's a strategy that you're going to seek financial return, but you're also looking to create positive social, environmental impact on what you're doing. So I think we all do that, whether we consider it or not, unless your investments are solely based on ROI and you don't care what kind of business the company that you're investing is in. And I think most of us somewhere draw the line about what kind of companies that we will invest in. And the higher you draw this line, metaphorically speaking, probably the closer you get to impact investing. So when I invest, I look for a good rate of return, but I also look at what the company is doing and do they, in general, match the values that I have? Do I feel good being known as somebody that's investing in this company and trying to seek a reward for that? There's more technical definitions, especially when you get into managing funds and so forth, that are used along this line. So you have to have a delineation of exactly what you mean. So you'll see SRI, or socially responsible investing. You'll see ESG, environmental, social, governmental, and then there'll be policies that'll be put out for that. And then there are watchdog groups and there are advocacy groups. So there's a lot of talk going on. But it comes back to what I started with, value and values, and they both have to be matched to go forward. Maybe we can talk about some specifics on the next round.
Sharif, you're muted. Sharif, I think you're going to me, so I'll just go ahead and go.
Sorry, thank you.
David, I agree with you as we look at that end. To me, impact investment goes a little bit even beyond what you were saying there. As you look at it, and there's so many different types of it. But impact investment is an investment strategy that aims to really, with many people, reflect some of their core values, reflect what they want their legacies to be, and it reflects where they believe their own self image is. And it can be either an individual or corporations or others. But impact investment at the highest level aims to generate returns, but with really trying to look at different types of considerations, social considerations, environmental considerations, uh, geographical ways to look at it. And impact investments may take many forms of really many different asset classes and try to look at outcomes. I was on a call earlier today with a company that is wanting to use the old traditional share equation as a way to bring wealth to people who are outside the traditional wealth areas. You can go back to England, the early days in the United States and others, where you saw things like barn raising, where a group of people would come together to build and raise a barn, and they would share their assets for a greater good. That's what this company is about. And actually, that is a form of impact investing at a micro scale. They're putting it together a system to do that, but it's designed to look at how do I take impact investing to a micro economy and make it work. But investors also, in some of the instances on the institutional side of impact investment, they follow a company's commitment to corporate social responsibility. And you see social responsibility, SRI type of investing, you see environmental, social, and government investing, and you see many other types that are uh, really used there. But the term impact investing was actually first coined as a word back in 2007. But the technique and practice developed years and years before that. You know, a basic goal of impact investing is to reduce the negative effects of business activities can have, and that's why some impact investment is sometimes considered an extension of charitable giving, because you're seeing that and you see the areas going there. But let me step back in just 1 second and kind of, you know, from me speaking before, I'm a framework type of guy and a system type of guy. And let me give you part of what I believe the spectrum is for impact investment. As David mentioned, as you look at basic investing and traditional investing, the prime driver is competitive returns. And, you know, traditional investment is really very razor focused on how do I get competitive returns versus what's my risk of staying in the position, and how focused am I am versus how diversified I am. And it has little to do with the impacts or even legacies that you want to uh, put in place by your investing. But then you go to responsible impact investing, which is really a ESG type of risk management and mitigation. And you see responsible impact investing really looking at putting together a portfolio and strategy based on factoring out and screening out a bunch of the ESG risks. You know, some of the ESG type risk you see at that type of impact investing are tobacco, alcohol, gambling, weapons, uh, pornography, uh, nuclear energy, petroleum industry, and others. But you see that as a screening tool on ESG. But then you begin to see something that is called sustainable impact investing, which is also a type of investing. And it looks at the sustainability factors and the financial returns that drive the investment selection. Some of the things you consider with sustainable impact investing are things like what's the carbon footprint? What's the trending on the carbon footprint? What are the resources used? What's the waste reduction? What's the compensation, the product safety? Is there gender equality? Is there racial diversity? And those are some of the things where you see sustainable impact investing. Then the next type of impact investing that I've seen, and is part of most frameworks I've reviewed in the past, is something called thematic impact investing, where you have targeted themes and financial returns are driven your investment selection on your targeted themes. It might be uh, targeted themes looking at climate change, urbanization, uh, population growth, food systems, automation and trends in manufacturing and logistics. It could be technology being used as a thematic type of impact investing, where the technology is particularly technology that's used to spread education around the world or to spread healthcare around the world. And those are places where healthcare and education are the themes that help drive your thematic impact investing. But then the next type of impact investing is one that really kind of looks at maximum impact, but highest risk. And it's impact first investing. And what that is the social, the environmental, the legacy, the other type of considerations, like we talked earlier, of things like uh, health services, education, and others. Those take precedence over financial returns. And I've seen people devote a fair, significant amount of their resources to this type of impact first investment, where they almost don't worry if they lose it, if they have an impact, if they can make that difference, if they can have that legacy play out of it. And part of this is you look for places where innovation risk taking. You look at early proof of concept pilots. You look at enabling things. You look at commercial capital leverage and others, and those that are put there. And then, really, on the far side of the framework, it's just philanthropy. How do I get do I get returns disregarded in favor of my social, environmental, and my other type of legacy concerns? So this is really charity when you look at it in the big picture of it. Now, there's all of these things that can be pulled together there. And impact investing is not a single narrow bucket. It's not a soda straw, but it really spans the breadth of these. And many of the people who I know who are focused on impact investing and legacy recognition believe you can have a return and can have significant impacts in your investments beyond that. It just takes more work. It takes a better strategy, and it takes a better understanding of how you see risk, how you want to balance your area. I have a good friend who has very strong feelings and does impact investment. And this particular last quarter has been rough for them because with all the things happening with the war in Ukraine, with environmental air things, with the political turbulence that's happening, the investments that were driving his impact investments have been cut probably by 75%. And so you take those risks when your impact investment is as out of tune with the rest of what you're trying to do. But like I said, I have fantastic financial advisors who actually specialize in impact investing and in legacy investing, because oftentimes your legacy of the family goes hand in hand with impact investment. Believe you can have your cake and eat it too with this, and then we just have to do more work. I can keep on going, but I'm really looking forward to hear what Donald has to say as someone in the midst of Silicon Valley, where some of the early stages of impact investing were grown out of. So Sharif, thank you for this part.
Thank you. Thank you. Professor Donald.
Hi. Well, I think when we talk about investing, we have to think first off, who are investors? And there's quite a lot of different classes of groups of investors, but the bulk of investors are people who aggregate money and it's managed by someone and then invested. So that would be mutual funds and money under management. So there's individuals buy stocks, but individuals who buy individual stocks are usually actually not that smart. That doesn't usually work out for people that well. I mean, I know people that day trade, they work very hard at it and they do very, very well for a while, and then all of a sudden they lose everything, and it's a pretty tough gig. But if you put your money into an index fund and just wait, you're eventually going to start making money. And I actually had a person who's been nominated for the Nobel Prize for Economics, and he told me he helped us design a portfolio for our stock market, and he says that's the only way to go. And he's right. So anyway, the point of the matter is now you have all this money, and your money's under management by somebody, and that person's managing your money, and they're going to invest it. And that's by far the bulk of the money that gets invested. And then, there's other large chunks of money, private equity, various other large chunks of money that people invest. And the people that invest that money have a responsibility to make sure that they get returns on that money. The biggest investment firm of all is called BlackRock, and they manage more money than anybody else. And I'll get back to them, but I want to say something interesting, which is kind of funny. I was looking at The Economist, and in 2011, they were talking about this new class, this wonderful, interesting new class of investment called just what we're talking about sustainable investment. They said they expected that by 2020, it would be $1 trillion. Well, actually, I just looked at what it is now, and they think it's about $35 trillion. And Blackhawk said just in 2021 in The Economist, they're quoted as saying it's marketing hype. It's not, because there's no way of knowing exactly what people are investing in, and there's no criteria that is agreed on for what it means to be doing socially responsible investing. And Blackhawk argues that owning shares in a petroleum company or in an energy company can actually allow the shareholders to force the company to change their ways. And if you don't own anything in the company, then you can't. And so that actually owning shares in the company is a better way to cause the company to change than not owning shares. So that's a very interesting take on it. It's an interesting thought. And that's actually, there's an example of that is that Shell Oil has been being pressured by its shareholders, and it's actually making significant changes because of that. So it's not clear that this impact investing is actually necessarily the way to go. Now, the real question is impact investing getting good returns? And the answer to that is, I looked at a very recent McKinsey article from 2020, and they looked at a lot of impact investing and, averaged it all out and stuff, and they do get reasonable returns. So the impact investing can get good returns. If your impact investor, though, is investing for, one of the things David mentioned is the idea that an impact investor is investing because it's their values, and they're feeling that, what I'm doing is a really good thing for the planet, and I don't care if the company loses money. Well, if that's your pension that you're investing in, that's really not something you want to do. I mean, it's great, but you've got to eat when you retire. I mean, that's just something that's the reality of investing. So it's an interesting idea, and I personally feel that I don't want my money being spent on something that's harming people. I mean, I certainly don't. I think there's alternatives to, say, tobacco companies, and there's alternatives to a lot of different things. And I certainly would prefer that my money was being made, my investments were going to something that wasn't hurting people. But as I said, sometimes there's power in being able to change things. I think a really good example right now is that lunatic Elon Musk got complete control over Twitter, and he's absolutely ruining the company. The head of NASA the other day said that he was greatly relieved to find out that Musk did not run SpaceX. He said, he literally said that. He said, I checked into it and I found out that Musk does not run SpaceX, and I was greatly relieved. So basically, the board of directors represents the shareholders, and the board of directors has the ability to fire the CEO if he gets too outrageous. And so the shareholders are represented by the board of directors, and so the shareholders have the power to actually change the directions of the company. And so activist shareholders might make more of an impact than as impact investing. So impact investing might not just be not buying stocks in bad companies, but it might also be buying stocks in bad companies and having them change their ways. So thank you.
Thank you. Excellent discussion. So David Schumacher, World Talent Economy Forum, basically we focus on emerging economy. Emerging economies measure like around 50 to 60% actually youth, highly talented people, very talented people, but they are ignored because of the system. They are ignored by the like all of the G20 or the big companies or the big universities. Many people actually ignore their talents. So how the developed nations or the developed nations partners, they can invest more these talented people and bring more prosper and better future for this world.
There we go. I thought I came off mute already. Anyway, yeah. That is another really good question. You had some good thought-provoking questions this morning. Let me try it this way, one step at a time. So when I look at impact investing for developing countries, I was trying to see what there would be different, what there would be that would be the same. And I think that the nature is a bit different. Say, for example, Bangladesh, one of the major industries, I think, that really needs an infusion there. And correct me if I'm wrong, Dr. Sharif, but that would be power generation and so forth. I think that that's a big issue there. So how do you drive investment for, say, power generation in Bangladesh or anywhere? But I'll just pick Bangladesh at this point. So obviously, there's governmental investment that comes in from your own government, and then perhaps relationships with other government, other countries that are in the area for, say, perhaps power sharing or whatever that might be. And then there would be agreements in that respect. But where does it become impact investing at that point? I think all would agree that having a stable, reliable, green power source would be wonderful, but where do you get the money for that? Well, it goes back to what Donald and David were both saying about the class of the investor, the type of the investor, what kind of returns they want to make, and what are their other choices for investment. So the investment there for Bangladesh would have to be something about it that would have an attraction to the investment money. I don't think that investors are going to not pay attention to talented people or to good solutions if they can see what that return on that investment's going to be. And that takes into account not only the actual investment itself and the company itself, but also the environment that it works in. We mentioned taxes. We mentioned I'm struggling for the word here, but it has to do with how business is done in that particular company, and does that fit the profile of those that would be investing? And to Donald's point, a lot of that money is probably going to come out of special funds, once again, not from individual investors. So it needs to be like made into a showcase for those, for that type of money. And it's going to compare with what other investments they have. But the impact side of that is perhaps, do we want green energy being developed for Bangladesh? Which, by the way, congratulations on the work that's been done as far as solar and so forth for the country. Even though it's a small part of the solution, there's been a great deal of effort that I've seen there. But anyway, that investment money needs to come in from whatever the sources are going to be. So it's like a marketplace trying to get that money. And there's a lot of other competition as well. Perhaps there's even problems inside the impact investing community. Gee, I don't want to put money into oil companies, and the funds that can do that with also restrict investment, say, into nuclear. But I like the idea of fourth and fifth generation nuclear and would like to see that develop. So then I would need to put my money into a different fund. So there's a lot of different aspects here that make it a really tough question to answer. But supply and demand, advocacy, and showing a good return on the investment are places to start. And I'm anxious for my other esteemed colleagues to take a crack at that and add what they have for it as well. Thank you.
Thank you. Professor David Smith.
Well, Sharif, there are so many good comments here, and it's remarkable how all of us seem to be in sync today of the importance of looking at how to put in place the things that can impact the world and impact our desires of what we want to see happen and our legacies, which I've mentioned a couple of times. You know, I think David was very right. And as you begin to look at the statistics, the bulk of impact investment is done by institutional investors. So you see these in hedge funds, banks, pension funds, fund managers, but you also see them in private foundations. And I almost want to separate private foundations out from what we're doing today, because you see some like the Gates Foundation, you see the Susan and Michael Dell Foundation, which are really stepping up the bank to go and have impacts with what they're doing. So you also see a range of socially conscious financial service companies, web-based investment platforms, and investor networks beginning to move over towards impact investing. And now you're seeing the opportunity, because we live in a digital connected society where we have the ability, like we discussed with Web 3.0 yesterday, to move the power from the large organizations down to the individuals and the individual owners. You're seeing more and more done at the individual level with impact investment. You know, one of the things that's an impact investment, but you don't really kind of think about it, is some of the GoFundMe platforms, particularly for developing nations. And I've participated in these. Is you see microloans, microfinancing, which provides small business owners in emerging nations with startup or expansion capital. You often see these targeting different groups within those microfinancing, such as women are very often benefactors of such loans, or single parents or others, which is really a type of impact investment too, where the possibility of returns outside of them being successful sometimes are minimal, and you look at it. But you also see that impact investors and investments are putting their money into emerging markets and developing economies. And as I talked about before, particularly when you see impact investment going into emerging markets, it's often in healthcare, education, energy, particularly clean and renewable, and oftentimes agriculture. Uh, and we're now seeing more of it going into micro manufacturing and micro entrepreneurship in the emerging uh, countries and developing economies. And this is really a very strong type of impact investment. And you really have to take them and put them into the context that demographically we see more and more of that. So, looking at the demographics of impact investment, we're seeing that the younger generations impact investing appeals more and more to the younger generations, such as the millennials. They want to give back to society. So this trend is likely to expand as those investors gain more influence in the market and as they begin to see larger profits. You also see impact investing very often by successful individuals who want to finish strong, who are at that part of their life, and who, in many instances, want to create a legacy not only for themselves but their family with what they're wanting to do. Um, and you see that these investors, though, kind of want to make sure that there potentially is a return. There was a survey done a couple of years ago by Global Impact Investing Network that found that 88% of their impact investors reported that their investment were meeting or surpassing their financial expectations. And so if you plan well and work it, impact investing can have a positive output. And you begin to understand that. There's also, as you look at impact investing, something called socially responsible investing, and how that fits in. We've talked about that. Many asset management companies and banks now have funds set aside, and you heard Donald talk about funds earlier, but these funds are explicitly tailored to social responsible investors. And you see those, I mentioned earlier the Gates Foundation. You see that while a lot of it's in philanthropy, it also has a strategic investment fund where the ventures from that strategic investment fund, which is, if I remember right, around $3 billion, it's in ventures that improve health, education, and gender equity. Um, and these are often targeted to organizations or projects that benefit the world's poorest population, and they're often overlooked by traditional investors. So out of the Gates Foundation, that's an example. You have ones like the Ford Foundation, and it's one of the larger private endowments. But most of the money is given as grants that support causes aligned with the values of the foundation. And that is one that you're seeing there. Like I said, I see many others with friends who have done well in technology, friends who've done well in healthcare, and others, which are exactly tied into it. But you begin to see it, and you're beginning to see firms and financial analysts which are directly tied to it, having an impact with the investments. Like I said, I was on a call earlier with the lady who runs the premier impact investment, legacy investment group in Central Texas. And I can tell you, looking at what she does for their clients with the impacts they have, and with the impacts to create good and the impacts also to create legacy, I see it every day of how you can have your cake and eat it too, as she often likes to say, where you can have the impact, where you can make the difference, where you can help the world be a better place, where you can go and look at the principles that have governed a lot of the world uh, for millennia, where we were in simpler times and we did things to create impacts. Like I said earlier, where people came together to help each other, where you saw people coming together to build houses, barns, where you saw the earlier education coming together, not as a formal institution, but people coming together to make an impact with education, with all the areas. And we're seeing that now repeated in the technology driven, communication driven industrial world we live in today, with a return to some of these values of human worth, human capabilities, and how those impacts are very important for us not to forget, and to be able to invest our time, talent, and resources in to have that type of positive impact. So Sharif, that's kind of where I am right now.
Thank you, Professor Donald.
Well, I think the question was about how this could help the developed world. And there's kind of a fundamental issue, and I'm running into it now. It's something I haven't had as much experience with, because I come from a background more in high-tech businesses. And recently I partnered with a person with about 40 years in the construction business, and he's the grandson of someone who's started a construction company. So his father was in the construction company, his brothers are in construction, and he's just done construction forever. And he specializes in solar. And he's doing a project right now, building 200 homes, and the whole thing is going to be powered by solar here in Santa Cruz. And you know, we've talked about the solar powered transportation system that he's building and wants to build. And one of the things that's interesting about that is we're talking about tens of millions of dollars to build these things. And ultimately, let's just say we spend $10 million in one city, and then we want to do it in 10 cities in a country, or 20 cities. Now all of a sudden we're talking about $200 million. And if you go to somebody and you ask them for $200 million, what do you need to have besides the expertise to build it? You need to have a very, very solid reputation and ability to handle $200 million. You need to have a certain kind of expertise that makes absolutely 100% sure that the people that give you that money or put in that money are going to make sure that money is handled and taken care of in a transparent and absolutely safe way. You need to make sure that that's going to happen. And what winds up happening, and in this situation, you have to think about, okay, you build a transportation system in a country. Who owns it? I mean, if the construction company gets the investment and the construction company builds it, it doesn't make sense for the country to own it. So what winds up having to happen is that you have to make a basically public-private partnership where the country puts in some of the money and the country becomes one of the investors. So they both become investors, but there still has to be a way for the construction company to get back some of the money that they've invested. So one of the ways to do that is for the construction company to operate the system for a period of time so that they get a return on their investment from the operation of the transit system. And that's a really good one for the country, because if the transit system doesn't perform as well as it's supposed to do, the construction company's on the hook for it instead of the country. But usually a good system for that is that the construction company operates it for a while, and then the country buys it at the end, so the country completely owns it, and then it gets the operating revenue for the future. That's build, operate, own system. And so anyway, the point that I'm trying to make there is that the country itself is going to provide the construction workers, and it's going to provide basically the construction. If Bechtel in the United States is one of, I think, the biggest construction company in the United States. And so Bechtel does international projects frequently, and they don't send their people from San Francisco and their bulldozers and so on like that from San Francisco to the country where they're doing the work. What they do is they subcontract organizations in the country that they're going to, who have the bulldozers and have the construction workers. And they need to make 100% sure that the organizations that they're hiring have are honest enough and capable enough to be able to do the work that they need, so that when the project is finished, it actually works and there's no problems with it. And so what I'm saying here is that part of investing is to have a solid infrastructure to manage the money, that manage the investments. And so for a developing country, what's really, really important is to build an infrastructure that's transparent and basically not corrupt, that is basically that's solid, that is trustworthy. So that's got to be one of the first things that you need to do to be able to get investments of the kind of size that you want to have. Because like one way of doing it is you put the $100 million in escrow and you take it out when you need it. And if something goes wrong and things stop, then the rest of the money's still there and the person can get it back. So, but that money can't be stolen by somebody. That isn't going to work out. You have to trust that money's going to stay there, stay wherever it happens to be. So I would say that when you're looking at developing country and you're looking at investment and trying to get investment, one of the first things to do is to really try and build a banking infrastructure and an infrastructure where you can be 100% sure that you're using standards like Switzerland, if you possibly can. So solid and so trustworthy that anyone would be willing to work with you, and their $100 million or $200 million would feel perfectly safe in your country or the developing country that's the target of the investment. And that's my 2 cents worth right now.
Thank you. Mr. David Schumacher, what's your concluding remark for today's session?
Another excellent topic, and I'm really glad that you invited both David and Donald. I took notes and learned quite a bit from them, and I'm hoping that your audience did as well. From my standpoint, I'll go back to where I started with value and values, and I think that's still what it comes down to, whether it be individual groups of investors or a single lone investor that's out there. It's a matter of balancing both value and values. I might say that from a small-time investment standpoint, I participate in an investment club here that actually has members both in the Arizona area and in some other states, and we collaborate on investments. And even in a small group of people, it can be difficult to align our values correctly, but not correctly. It can be difficult to align our values in complete synchronization. That isn't the case. But we can provide information back and forth and make investments on our own that might be different from the group, while still sharing information with the group and maybe doing some low-level advocacy for what different people that are in this club value as far as investments are concerned. So it's a microcosm, I would think, of the larger investment world that's out there. We're all not going to agree, and I think that's fine. And if my investments are different from your investments, but we're both investing with what our values are, then I think this is a good thing. So while I don't have any problem with definitions as far from different funds as to what they consider to be socially responsible or what they consider to be their ESG definitions, I always want to maintain that I can decide where to put my money on those that match mine in particular. And so that voluntary, open-ended, ethical point, I think, needs to be maintained. Not that anybody's saying that it's not. It's just that that's something that's very important to me. Thank you, Dr. Sharif. Another great show.
Thank you. Thank you. Professor David Smith, what's your concluding remarks?
Dr. Sharif, thank you so very, very much. And David, I'd love to be able to tack on to what you said, because what I see there is very interesting. I actually had taken the time earlier to see what were the top areas where impact investments were made. And it was kind of surprising to me. The largest category was environmental sustainability, and then renewable energy, but then sustainable agriculture was there. And you see those. But then you begin to see the ones underneath it, which I thought were very interesting. Sustainable and affordable housing, aging is an area of impact investment, community development, gender equity, education, faith, health, local investing, small business, and microfinancing. And some of those have almost a 50-50 split between investing in developed versus developing nations. So just simply looking at the diversity below uh, the environmental and sustainable agriculture and others, it's a lot of areas. I mean, as someone who's getting older every day, I think investing in aging as an impact is a very strong one. And I believe in faith investing. I believe in that in many countries, the whole healthcare system and health is broken. And how can we make impact investments in that? I also believe we're in a time where the education processes need to be redefined and reestablished and new models brought to bear there. Uh, and particularly in the softer side of education that COVID and other things destroyed. Uh, an impact investment in those areas, I believe, is very important for today. So, as I said at my opening remarks, the areas of impact investment is actually extremely broad, with many different types of impact investments done. And the reasons for them is also extremely broad. The people and organizations that can do impact investment is very broad. I would tell you one of the stories. I have been in Haiti multiple times, and we see a lot of impact investing happen in Haiti. It's the poorest nation over in this part of the world. But what is amazing to me is you're seeing large groups like the International Development Bank, USAID, the World Bank making sizable investments. You see thousands of faith-based organizations making impact investments there. You're seeing foundations, you're seeing other groups investing there, you're seeing individuals coming up and making investments there. But what really surprised me is my last trip to Haiti is I began to see Haiti citizens pooling their money to make impact investments in their own country, even though they're the poorest developing nation in this whole part of the world. The local folks were trying to pool their money and make an impact investment. It doesn't have to be the large institutions to have an impact today. And because we live in this global connected society that we've all talked about, uh, we have more opportunities than we've had at any point in history to make impacts in our investment. We have more opportunities to take our impact investments and create legacies for ourselves and our family. And we have more opportunities today globally to be able to change the world. Instant action, impact investing, creating your legacies is about changing the world. And to me, that is the key element when I look at the whole concept around impact investing. I want to help an individual. I want to help groups. I want to help countries. But at the end of the day, many of these impact areas like sustainability and others, health, is to change the world. And I think as we look at that, that is my closing comment is let's use all the different types of vehicles we have under impact investment. Let's use all the different resource areas we can under how to create impact investments from various forms of wealth. And let's change the world. So Sharif, that's my comments here is let's use impact investments to change the world. So thank you so very much.
Thank you. Thank you for your excellent contribution, Professor Donald.
Well, I really have to agree 100% with what David said, that we have to try all the different possible ways. I want to really just kind of revisit what I said before, which is that the majority of investment is institutions that are investing other people's money, and that they have a responsibility to get good return on the money. So they're in a bind that when they're investing the money, they have to be, they can think about making sure that what they invest in is socially responsible, but they also have to make, be careful that the money has a good return. And I think, leveraging off of what David said about using every means available, I mentioned before that sometimes activist shareholders can do more good than not investing in the company. So sometimes investing in bad companies can make a difference. So by just not investing in a company, that may not be the way to go. I mean, some of the companies, maybe it would be good if people could invest in Coke Industries. It's a private company, and those guys can do whatever they want and do, and they're kind of a problem. So, and the other point that I made is that was, oh boy, it's too early in the morning. I can't even remember the other point I made. But what I'm saying, that's weird. So anyway, I think that, yeah, but I'll leave it there and just yeah, I'll just leave it there. I didn't get a very good night's sleep last night, so I'll leave it there. And it's always nice working with you guys.
Thank you. Thank you. Thank you. This is excellent discussion, specifically for the emerging economy. I have a lot of entrepreneurs, social entrepreneurs. Somehow they do not have enough knowledge, guidelines, and mentorship. So hopefully this session will be very, very, when we discussing that time, I'm just sharing exactly the social entrepreneurs. I'm sharing a lot of social entrepreneurs here through my so I'm just sharing with them because it will be really, really great session for them. Thank you, Professor David Schumacher, David Smith, and Mr. Donald, for your continuous support for World Talent Economy Forum. That is the way we are actually growing. The World Talent Economy Forum more focus on talent. We do more focus on the youth communities, and we are engaging with the government agency, corporations, and academies, and we are inviting them invest on talent peoples, invest on the talent economy. That is more important. Definitely, I want to invite the developed nations people, do not invest in wire and all of the political activities. Better you join in this ecosystem. And I'm very, very happy how World Talent Economy Forum getting support by the social entrepreneurs. We do not have any like big support from developed world here, there, no, nothing. All of the social entrepreneurs, those who are hungry people, those who are smart people, they actually join. They're supporting our ecosystem. So now we are working with the emerging economy, and I can ensure all of our dialogues, it's converting as a project. And in this way, we are actually minimizing the gap in between developed world and developing nations. Next year, April, we have our face-to-face conference. I'm sure those who join in our conference our conference, they can learn more effective things, and we can exchange our culture and activities. So thank you, our audience. Please share our content with your government agency, corporation, and academy. Thank you everyone for joining today's session. Thank you. Bye bye and take care.
Bye. See you next time.